Representative Lippert, please move your bill.
Thank you, Madam Chair. I move that House File 3739 be laid over for future consideration.
And thank you, Representative Lippert. House File 3739 is in our packets, and if you can go ahead and with your information about the bill.
Thank you, Madam Chair. Members, we've discussed many times in this committee the crisis that many farmers are in currently. We know that many farmers are in crisis due to low commodity prices, high input costs, volatile weather conditions. There are a series of bills that have emerged from farmers that seek to respond to this current crisis. These bills include more money for farm advocates, allowing farmers in debt mediation to pay a flat $100 per month fee or premium for Minnesota care coverage for their family, and then this bill that provides loan fee grants for farmers in mediation to assist them in restructuring their debt through FSA-backed loans. In 2018, 3,500 farmers were referred for mediation. 3,500 farmers were not able to pay their bills and had at least $15,000 in debt that was being called by the bank. Approximately 1,200 of those farmers entered mediation. 85% of those mediations were successful, but that means that about 180 farmers, or 180 of those mediations failed. Farm Service Administration data says that from 2016 to 2019, the FSA's withdrawn or denied loans ranged in number from 105 to 155 annually. The average amount of those loans was roughly $350,000 each of the 4 years. So this bill comes forward with the assumption that the withdrawn and denied applicants and those failed mediations could be served by a program which would eliminate closing costs and fees for farmers that are trying to restructure their debt and move them into FSA-backed loans. Those fees are 1.5% of loan value, or around $3,000 to $5,000 on average. So that would be a $3,000 to $5,000 benefit for a farmer in mediation looking to restructure their debt. We think this is a concrete way to respond to the farm crisis and help more farmers get through the mediation process. And with that, I'll invite other testifiers to come forward today.
All right, so we'll begin. Welcome to the committee. So Mr. Sobocinski, if you want to begin.
Thank you. My name is Paul Sobocinski. I'm a livestock farmer. I also work with the Land Stewardship Project. I'd like to make two pieces available to the committee before I start my testimony. One of these pieces is a farm crisis statement that our organization put together with our members. Another is a graph and a look at the mediations here in Minnesota, comparing now to back in 1986 when the farm crisis was at a height, actually starting in 84, but legislation happened in 1986. This morning I'd like to lay a little context for this bill, and that's as it relates to the farm crisis statement that our organization worked on we developed with 40 of our members, held series of about 6 or 7 meetings across the state, and we just did a final piece of that process in Mankato with about 170 farmers and supporters of ours that turned out for that meeting, and a meeting with our Commissioner of Ag, Tom Peterson, and our Attorney General. So the bill that we're advancing here today is we're looking at as a series of policy recommendations due to the farm crisis that Representative Lippert spoke to. And in terms of the farm crisis statement, a couple pieces just to make note of is the farm income is at a disastrous level. And while our state policy recommendations, which is on the second page, get at parts of the pieces. These are some recommendations that we're suggesting to the state, and other recommendations we have in here. Not everybody will agree on all the solutions perhaps that we offer, but we offer them in sincerity about doing something about the farm crisis. My history about working on the farm crisis goes back to 1984, 1985, when I was part of forming an organization called Minnesota Groundswell that worked in the crisis. I see extreme similarities to then. And one of the results of our work that we did in Minnesota Groundswell and working with other organizations at that time, we got a number of solutions that were achieved in a bipartisan effort. So the number of bills that we're advancing, we're trying to advance them with a bipartisan spirit. And that action back then resulted in, like having mediation, that Representative Poppy, you just spoke to today. Resulted in having a farm advocate program. That resulted in getting an interest buy-down program. And while interest rates are lower right now, we need different tools in the toolbox. Farmers need different tools. It's great to provide farmers with counseling, but if you're giving farmers counseling, you got to do something to relieve the pressure. And this bill that Representative Liffert's offering, along with a number of co-authors, Representative Hamilton, Representative Lewick, Representative Gunther, and Claiborne, Papke, and Vang. We want to say thank you to all this bipartisan spirit, and that's what we think is important to move forward, to start to get at some of the pieces, provide some tools in the toolbox, that when a farm advocate is sitting down with the farmers in financial trouble, they have some tools to help them. Because this is the toughest time, I think, that we're seeing right now at this period in time. It's important we move forward. Thank you for the opportunity to testify this morning.
Thank you, Mr. Sobocinski. All right, Mr. Miller. Welcome to the committee.
Thank you.
You just state your name before you begin your testimony.
Dan Miller,
Thank you.
thanks for having me. And thanks for considering this bill and inviting me here today. My name is Dan Miller, as I mentioned. I farm about 800 acres near Spring Valley, just south of Rochester, with 2 adult sons and a daughter. 3 of my 6 kids are still in high school. We do grow conventional corn, oats, soybeans, and alfalfa. Part of the farm is also certified organic. We do raise we raise Angus cattle. I grew up on a dairy farm, went to UW River Falls and the U of M, and serve as chairman of the board of the Midwest Forage Association. And alfalfa is our 3rd major crop in Minnesota as well as nationally. I also served as an extension educator in Redwood Falls for the University of Minnesota, as well as the University of Wisconsin in Price County. But for the last 30 years, I've taught farm management with Minskew, first in Fergus Falls, and then more recently now in Spring Valley, excuse me, through Riverland Community College in southeast Minnesota. Yesterday, myself and 40 of the roughly 60 farm business management instructors met all day at South Central College in Mankato to help compile farm business management data for the southern aspect of the state. And of course, we put together those numbers annually in a publication. But we also join that data with statewide data with the University of Minnesota Farm Financial Management area. And next week, we will compile the statewide data for the FinBin online farm information from around 2,300 Minnesota farms that is used by farmers, lenders, agribusiness, policymakers, and others to make decisions. While we don't have those final numbers yet, we should in a couple weeks. But we do know that the last 6 years have been very difficult for Minnesota farmers. Net farm income in 2019 was about half what it was in 2013. So, and also the debt to asset ratio was around 40% in 2013. So on average, each farmer had about 40 cents of debt per dollar of asset in 2013. Today it's about 50%. So it's about 50 cents of debt for every dollar of asset. So equity or net worth as a percentage has diminished. Due to cash flow challenges, farmers are refinancing short-term debt and re-amortizing it long-term, secured by their largest asset, farmland. The problem in the last 6 years is a result of farm product prices being less than the cost of production due to no supply controls, perhaps in the dairy farm or the dairy or the federal farm policy, as we have had basically since the Great Depression 1930s, and also heightened recently by the loss of some export markets associated with steel and ag trade wars and retaliatory trade tariffs. The market facilitation payments, some characterized as the Trump-China trade payments, which in my county, out of 87 counties, I'm in Fillmore, were $54 an acre last year, which significantly helped in 2019. However, they are not guaranteed for the future, so can't use them to plan on or put in a cash flow or anything like that. The farm crisis of the 80s was similar but yet different. The energy problems of the 70s with OPEC, Arab oil embargo, and gas lines created high inflation. In 1980, to curb inflation, the Fed raised interest rates. It was very hard on farm borrowers. However, farmland values, of course, are very, very sensitive to long-term interest rates. Consequently, farmland values dropped into about from 83 to, from 81. By 86, they're about half the 81 value, so they dropped in about half. Farmland is about 70% of most farmers' balance sheets as far as an asset, so net worth and equity plummeted, and lending and financial problems occurred. Minnesota had an interest buy-down program in the 80s, where if a farm operating loan was at 4%, if the lender reduced it by 2 points, the state jumped in and picked up the other 2 points, which was helpful in the early 80s. Interest rates, of course, are historically low right now, and as a result of in fact, as a result of the coronavirus issue, of course, the Fed just dropped another 0.5 point 2 days ago to stimulate the U.S. economy. The coronavirus issue will not help our efforts to export Minnesota farm products and actually would likely make a bad situation slightly worse. This is impacting a lot of the farm families, of course, throughout the state. The whole family is affected. Of course, female farmers are actually the largest growing demographic we have in the farm sector. Over half of present FFA, Future Farmers of Ag, and agriculturalist members are girls, for example, and farmers will need to lead the effort to solve the current climate crisis. Healthy, abundant food is inexpensive. Farmers have little control, however, over the input costs, product prices that they receive, or weather, so they are more vulnerable than most businesses. Risk is large. Of course, that leads to stress, which it leads to stress, and we need to do a really, really good job with the variables that we can control and affect our business, as there are many variables linked to success we cannot control. And as Ted Matthews mentioned yesterday at our group meeting, he's the farm psychologist, explained that to us in the meeting yesterday, if we dwell too long on factors outside of our ability to control, we may really become cognitively unhealthy. This bill is one tangible way that hopefully isn't a budget buster, that we can perhaps keep and help some of the most vulnerable farmers stay on the land farming and be a benefit to them. Farmers with good skills and abilities were largely caught in a bad way due to really 3 problems: timing, timing, and timing. They just bought assets or made business changes and just got caught in a tough time, or even if they didn't make changes, the narrow or negative profit margins of the last 6 years have weakened them financially. So that if we can help with loan origination fees on some of the most vulnerable farms as they refinance to position themselves to better weather this tough Minnesota farm macroeconomic time, I think I would highly encourage it. I did talk to Brian Hartman, who is the FSA lending leader for Minnesota this morning, just to kind of go over it. One example would be if a person, and I talked to a client of mine, a dairy farmer this morning, who's actually going through this exact same thing. But if they had $100,000 and they were going to have it guaranteed, still stay at the bank through FSA, was 100,000, you know, they'd guarantee 90% of it, they'd guarantee 90,000. And they would be charged 1.5% loan origination, which is $1,350. So that's one small, but yet way that we can perhaps be a benefit to them. So thank you for having me, and I would urge you to consider the bill.
Thank you, Mr. Miller. We do have one more testifier to come down. Stu Laurie had signed up, would like to testify on this bill. Welcome to the committee.
Thank you, Chair Poppy and members of the committee. For the record, my name is Stu Laurie. I'm the Government Relations Director for Minnesota Farmers Union. And I'll be brief. I think Dan gave great testimony, but just wanted to share our support for this legislation and eliminating a barrier that would allow farmers the opportunity to restructure. You know, this is an issue that I've heard from our MFU members about, and you know, I talked to a member this morning who was talking about his own experience with mediation and the origination fee, and even just the emotional barrier and the kind of psychological barrier that he had to overcome in taking on more debt in order to restructure his existing debt is kind of you know, difficult and probably results in some folks not taking advantage of that option. So I think this could be a positive change, and also support adding RFA loans to be eligible. That's something that, you know, I think because we've had so much attention from this committee and the legislature, been hearing from a lot of members who are thinking about RFA and how that might help them restructure their finances and make it through this tough economy. So thank you so much for the opportunity to testify, and happy to share our support.
Thank you, Mr. Laurie. Members, any questions? Representative Anderson.
Thanks, Madam Chair. Maybe this would be a question for the loan officer, or is he a loan officer? I think. Anyway,
He's FBM instructor.
FBM instructor. What's the difference between a USDA loan, of course, that's federal, and the RFA loan program, which is a state? Why would you choose one over the other?
Mr. Miller.
Good question. Of course, yeah, FSA, of course, is federal, and RFA is state through MDA. There are differences. This is what we're talking about here. Basically, is the federal guarantee program. So the federal government guarantees 90% of the loan. So if they default, you know, the most the bank can be out, let's say, is 10%. So, and it doesn't cover the USDA direct loan programs, which they do have. But they do not charge an origination fee on those loans. They just charge a credit report fee, $45 or something. And then the RFA loans are different. They are not guarantees, but they are direct loans, and they typically do, they're typically shared loan, where the RFA provides 45% of the funds, and another entity, such as a bank, would do 55%. So they're shared loans, direct loans, however. So this is dealing with the FSA guarantees and the costs associated with that.
Representative Anderson.
Thanks again, Madam Chair. Well, the bill has a net worth limit of $800,000 to be eligible, but I would assume somebody who's kind of underwater with their loan situation would not have an issue with the net worth being too large. So my question is there an upper limit of loans available from the USDA, those FSA loans? Or how large can they get?
$1,776,000.
Okay.
I confirmed that with Brian Hartman, USDA, this morning.
All right, and maybe Mr. Sobocinski has some comment about that.
So the RFA piece is taken right from that net worth piece is taken from the RFA, is a piece that you've adjusted over a number of years.
Yeah.
Okay.
Representative Anderson. Anything else?
Yeah, thanks, Madam Chair. Just a little confused about why we would use this for both a federal loan program and a state loan program. The RFA loans are wonderful, and hopefully today on the House floor, we're going to get that bill passed and get funding back again there. So, no, just kind of wondering about using the two loan sources for a state program.
Thank you. Any other questions? Is there anyone else in the audience who wanted to testify on this bill? I don't see anyone else coming forward, and I don't see any other questions. So Representative Lippert, House File 3739 will be laid over for future consideration. Thank
Thank
you.
you, Madam Chair,
Thank
members,
you.
for this opportunity for the conversation.